Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market as usual in the second report. Well, it was really outstanding performance last week on the gold market. Mostly it suits well in our long-term view, although long-term view not every time gives you the chance to foresee what particular event will trigger the upward action, strong action, and how the reversal will happen, but it just tells you in general that the market is turning and is standing higher. That's actually what we've got last week, and we think that this is just the beginning, as we still have the positive outlook for the gold market, and we think that market right now stands in a point where a new long-term bull trend is starting. So there are lots of different factors that support demand for a gold market right now, and we think that this demand will increase. And one of the important moments in the relatively nearest time, we have the elections in the United States in 2020, and Russia elections will be 2021. So it will be the time of the big uncertainty, and taking into consideration ongoing processes that we see in the global politics, in the global economy. So this could be described situation as tough, and this is every time very good background for a gold market. So in a shorter term perspective, we are watching mostly for the 1380 destination point. So we could estimate a lot of different targets, especially on the weekly, monthly charts, but all of them stands too extended, and now we're actually keeping an eye on the level that could be reached in relatively soon. And this is 3080 major 30% resistance on the monthly chart. That's also yearly pivot resistance one. That will be another talk about the yearly pivot resistance, because if market will break the pivot resistance, it means that indeed the new bull trend is starting, and the yearly pivot resistance have the special meaning from that standpoint. But at the same time, market right now stands at overextended. Technically, it's a bit tired from the strong upward action. And currently, we have the overbought not only on the daily, but on the weekly chart as well. And the weekly overbought is the thing that we should be deadly serious with, because it could trigger significant retracement. In most cases, it leads market to the daily oversold. So when the market stands at weekly overbought, retracement very often hits the daily oversold. So it's rather deep retracement. I'm not sure that we will get the same depth of retracement on the gold, because the bullish outburst stands strong, and it's difficult to suggest how far it could lead the market right now. So the overall euphoria could push market slightly higher, but it seems that market stands somewhere near where retracement should start. At least from the technical point of view, the current point, it's not suitable, not good moment for taking the new long position, because market really stands at the overbought. It means that you could take the position against the major retracement, and it will be very costly for your account. That makes us to suggest no new long position should be opened, and we should sit in the hands and wait for proper level for taking the position, at least where we could consider to do this. Currently, let's keep watching, not for very deep retracement. It's 1320. It's the first fib support, and see what will happen around this level. On a daily chart, we also could consider some Jordan-Napoli patterns, although we have the thrust that is just 7 bars to the upside, but take a look at the length of these bars. So they're just unstoppable action. It's very strong and fast, and tail close, especially in the beginning of this thrust, until market stands below the overbought. And I think it's very suitable for Jordan-Napoli setup. So if we'll get the bread and butter, that's the pattern that we could follow in trying to take position based on this pattern. That's what we have on the daily. Finally, on the final moment here is just take a look. Here we could get the washing rinse, because market slightly pierced the top of the February 12, 2019, and then turns down. And currently, it's of course a question whether this was the Russian rinse was due to overbought, or this indeed Russian rinse just market grabs the stops and turn down. So it's difficult to answer on this question. But anyway, that's a kind of the bearish signal that warns us that retracement really could start. So currently on the daily chart, we are not taking the new long position. We're just waiting for the retracement and consider levels where we could take the long position. So on the 4-hour time frame chart, as a result of the Friday's trading, so our suggestion trading plan is done nice because take a look, market indeed has broken this pennant to the upside, and it is interesting that the top of the day stands precisely at the daily overbought. So we said that take the profit right at the overbought, since market will have the problem with the breaking it, and take a look overbought and market turns down a bit. Retracement also could start by some relief in the United States-Mexico relationship. So they come to compromise concerning the migrants and corresponding tariffs that Donald Trump previously have intention to start. But it was postponed or maybe canceled them. So it's not really clear yet, but that's at least it was announced that some relief has happened in these relationships. So market could react on this on Monday by the retracement. On the 4-hour time frame chart, we also have the bearish grabber. It suggests the taking out of these lows, and market actually has completed butterfly sell. It's 127. So the two moments to watch on Monday. First of all, if market will drop below the lows and below the pennant, it will mean that retracement is started. And here, when you see the butterfly, it's very probable appearing of the hand shoulders, because butterfly very often becomes the part of the hand shoulders. In this case, we will keep an eye on the bearish reversal pattern, and then we'll try to calculate the possible destination point of this pullback. Also, the alternatively, market could try to proceed to the 1354, it's 1618 extension of the butterfly, the next target, and then start retracement. But I treat this possibility with a minor probability, because, as I said, market is already stands at daily and weekly overbought, and our prediction here to the 1354 looks less probable than retracement. But actually, guys, it's for a daily setup. If you trade on a daily, it's not very important where and how market particularly will turn down. The only thing that we're interested really is that market will turn down, and because that's provide us a chance to go along with the proper levels. Because we do not have intention to trade market on the short side, taking into consideration the overall impulse and momentum that we have. So that being said, our long-term view remains positive on the gold, but we think that the technical market is a bit overextended and it needs some relief. So we are watching for retracement. We do not want to trade it short. We just wait for a good entry level for taking the long position on the gold market. That's our view currently.